So you've made those profits in the bull run and now you need to take them out. But there is one person that wants a little bit of your gains, and that is the tax man. This is a video that's been highly requested on the channel. So we're going to break down what are the rules when it comes to taxes, your crypto assets, and how can you kind of avoid paying taxes. But FYI, you're probably going to need your passport. So go ahead, hit the like button and make sure that you subscribe to this channel. Also worth bookmarking this video so that you can come back to it in the future and just understand exactly what your obligations are and how you manage all of those gains. With that being said, let's get into it. So many of you will be in the world of what do you do after the bull market? We've already made our plays, we've locked in those gains, and now you have to pay old taxman Jim the amount of money from your crypto. Well, the reality is it does change specifically depending on the country you are in. And good news, if you wanted to, you can kind of move and, live in a different country. However, we're going to sort of talk a little bit more specific about the UK, how this affects us, but more importantly, what does that look like? So crypto asset regulation in 2025 has changed. In fact, there are some key countries that are very pro-regulation, and there are obviously some countries that aren't. Those that we already have heard of and that are very much in a pro-cryptocurrency stance would be things like Bermuda, Singapore, the UAE. The United States is becoming more and more pro-cryptocurrency. Japan, Gibraltar, Switzerland, El Salvador. And the opposite side of that would be things like the Dominican Republic, Uzbekistan, Cuba, Belarus, Vietnam, Pakistan, China, obviously, where they are very much against cryptocurrency or they very much don't agree with what's going on. So the big question, therefore, is how and what are your obligations when it comes to cryptocurrency? And more importantly, what should you be paying? Well, first we need to understand kind of what does that look like? What do you have to pay and when do you have to pay it? Because this is a key thing. And by the way, do not miss paying your taxes. This is a critical thing. So we'll talk a little bit about the UK. If you are not from the UK, and I know some of my audience are from the US, if you want me to do a US version of this, let me know in the comments down below and I'll absolutely do it. So let's work through what that looks like and how much you have to pay when you make your gains in crypto. Now, just from the start, it is worthwhile tracking everything. And there's a ton of software out there. I'm not going to shill you anything in this video. It is purely just for your benefit to understand exactly what it is. So in the UK, you're going to pay between 18 and 24% on any capital gains from crypto that are over a £3,000 UK tax allowance. Now, for reference, that £3,000 a year can actually be used as a gift as well to someone you live with, maybe a wife, partner, girlfriend, husband, whatever it is. So actually, the total number as a collective household that you are allowed tax-free every single year is £6,000. It's about $4,500. These are ultimately transactions prior to the autumn budget changes that are going to come into effect on October 30th, 2024, which we did see, and they are subject now to different rates depending on what your tax bracket is. And if you're in the UK, you'll know exactly what that is. For additional income for crypto over 12,500, personal allowance, you'll pay between 20 to 45% as well. So the big question is, can HMRC track your cryptocurrency? And in short, the answer is yes. The fact of the matter is that there is new regulation coming in January, which is going to be part of the OECD, which is the Crypto Asset Regulatory Framework, in which exchanges that are operating in the UK will be sending data to HMRC. Now, that is a thing they do right now. And again, this is based upon your transactions, it's based upon your holdings, and more importantly, what did you buy it at? And potentially, what did you sell it at? Now, this is one of the key things to think about how you can avoid tax. You simply hodl your crypto. For example, if you are bullish, super long-term on Bitcoin, and you just hold the asset, you'll never pay any tax on it. Once that conversion either back to USDT, USDC, or maybe into fiat is where you are going to pay it. So again, January 2026, this new regulation is going to come into effect where basically every single day, cryptocurrency exchanges operating in the UK will be sending things like full name, address, country of residence, wallet addresses, and your crypto transactions, including transfers, deposits, gross proceeds, and fair market value of assets. This is important to reference as we move forward. Now, there are no specific Bitcoin tax or cryptocurrency tax in the UK. It is just taken as a broader asset class and under the umbrella of capital gains tax or income tax, depending on your circumstance. So what does that therefore look like, and why and when do you pay taxes? Well, if you sell crypto for fiat, if you're trading crypto, including stablecoins and NFTs, spending crypto on goods and services, or gifting crypto unless it's to your spouse or civil partner, which we talked about right at the very start. Some of the things and which we, some of the things you can think about and how you can avoid some of these taxes would be things like, did you realize a capital gain or loss? For example, if you're trading meme coins or you maybe bought an asset that's gone down, this can actually be offset against your gains. This is why I talk about on my live streams. It's so important to track your assets, have a spreadsheet, whatever it is that you understand where you've got to. And did you dispose of crypto by selling, trading, spending, or gifting? And if you did, again, work through this kind of flow here to get to the point where it is either you owe tax or it becomes tax free. And I think it's important to reference. Just to give you a bit of an idea as to kind of where this looks like, and I know this is 2024, but you can see some countries out there that offer a 0% tax rate and some that are obviously in the complete opposite direction. For example, you could look at things like Switzerland, Luxembourg, Germany, Belgium, Croatia, Portugal, Bermuda, as well as El Salvador, the Cayman Islands, and many more that are 0% tax. Now, there is obviously, if you wanted to move to those countries, you can. There is sometimes a fee attached to it, or you have to live in that country for a period of time. So again, depends what your asset number is or what you're planning to do with it. The opposite end to that would be things like Japan at 45%, as well as India, Dominican Republic, Cuba, and Denmark, all at the top ends of 30 or into that 40% bracket. So again, here in the UK, we've already discussed about it. You can see exactly where we're at, but between 10 and 20%, depending on your income stance. So they are most of the things that go into, you can see the capital gain tax there, and more importantly, the losses as well. And you can carry your losses forward. So depending on what you did last year, again, you can bring it back through. The example would be Oliver made £20,000 gain selling Bitcoin this year, but last year he made a loss of 15. This obviously then works through in the fact that he would therefore bring it down to a £5,000 taxable event, again, to work through. So again, all those times you feel down and in the dumps where you've lost some money, these can be offset against your tax. Very much important to think about. So how can you avoid taxes? By the way, this is not an illegal way of doing it. This is just some ways in which people are doing it longer term. And more importantly, how can you avoid paying those taxes? By the way, you should just pay your tax. All right. Don't try and avoid it through any illegal or any other way. How do you do it? Well, the reality is you simply hold your crypto. Don't sell it, don't convert it, don't trade it. Just hold it long term. That's why you see some of these big wallets that stack their bags. Take advantage of that tax-free threshold, that £3,000 worth of capital gains tax benefit, and equally that £3,000 that you can give to a spouse or partner. Take profits in a low income year. Again, if you maybe are self-employed, or you have significant losses one year and then you make gains, make sure you just offset in both those two. They will reduce your tax. A lot of people don't realize you can actually offset, like it says here, harvest your crypto losses based on the year. Make crypto donation, again, so you can give away some of this cryptocurrency. And again, the value of crypto has increased significantly before you received it. You will be recognized as capital gains. Again, you can donate to charity and offset some of that cost. Gift it. We talked about $3,000. Hire a tax professional. Definitely recommend it. Don't just take my word for it. Actually get someone to look at it. If you've got a portfolio that's 6 or 7 or maybe even 8 figures, then I would absolutely be taking some key advice from absolute tax professionals. And again, what they tell you. You can invest in a SIP, which is a self-invested personal pension, and they're designed to help build your wealth while minimizing your tax burden. Here in the UK, at the moment, it is worth referring to that. It is tax-free to input money into your pension. This could be a way of offsetting it. And like we said, you can relocate to a tax-free country or use crypto tax software. I'm not going to go into any of that specifically, but that just gives you a very quick summary and overview as to A, when you have to pay taxes and be really clear on that. B, what sort of countries you could potentially move to, but understand there may be some restrictions as to how you do it. And more importantly, what to avoid when it does come to paying those taxes. Ultimately, it doesn't matter how well you do it. You either move out of the UK or you simply pay your taxes. But remember, the key thing here, understand your losses from last year and what does that play through into your gains for this year. And then you can absolutely make sure that you're paying the correct number of tax in this country. So let me know what you think of all of that in the comments down below. And by the way, if you want to see more of these educational content videos and you want to make sure that you are dialed in this bull market, let me know as always in the comments and hit the like and subscribe button. And I'll see you guys next time. Thanks so much for watching. Bye-bye.